I'm always fascinated to talk to people from the insurance industry who are involved on the investment side and would love to
Mm.
understand the concept of float that we hear so
Yeah.
much about when we read about Berkshire Hathaway and listen to Warren Buffett. So
Mm.
was that an important issue for you at NRMA? Was it trying to manage the float, or is there a different
Absolutely.
legal framework in Australia compared to the US?
Well, it's a good question because the NRMA Investments was directed to run as a Buffett type investment group, and the NRMA investment portfolio at the time essentially was managing 80% of the reserves of the NRMA insurance group. As it was a mutual, it didn't pay dividends. So there's your comparison to Berkshire Hathaway. Berkshire Hathaway doesn't pay dividends. NRMA as a mutual didn't pay dividends. It grew its reserves. And the direction was 80% of the reserves into the equity market of Australia. And that was a very open mandate. It could be unlisted and listed at the time. So NRMA was one of the first direct investors in the country. And we built up a pretty sizable unlisted book, direct book. We had external managers at one time, but then we brought it in-house. But the investment focus was on just buying good companies, not looking at the index, targeting a compound return of around 8%. The management of NRMA Insurance said if you can compound at 8% over 10 years, that alone will increase our reserves by about 150% over that period. And that's before we get flows, which is the insurance margin. And NRMA was run by very skilled risk managers. And I think we were renowned for that in the 1980s. And I'd point out someone like John Lamble, who ran NRMA Group. He was the executive CEO, and I think he was regarded as the best insurer in Australia at the time. And our chairman of the NRMA Group was Jim Milner of Brickworks fame. So we had blue blood in our company.
Yeah, very much so. Was there a slant towards value investing then, or was it more general?